Ashishkumar Chauhan, MD and CEO at BSE, joins in on the show to talk about day one of the IPO. Ashish, IPO is entirely different than OFS, where marquee investors like, the SGX are going to completely exit. Approximately about 28% of your share capital is on offer. Give us a sense of how the post-issue shareholding in float is going to look like.
Basically, post listing, I don't know how the overall structure comes out, but the way any public issue is handled, I think 60% is reserved for the institutions, and so largely there will be more institutions to begin with. But today BSE doesn't have any promoter per se. Nobody owns more than 5%, and that's where basically up to 1 year people who are not selling their shares currently will be locked. Their shares will be locked from trading. So whatever float comes in the first year is only 28%, which is currently on offer, 28.3%, and the remaining 71.7% will be actually locked in for a year. That's how I think overall structure will work out.
So tell us, how do you see the revenue mix from listing business and the data business shaping up?
See, traditionally the exchanges were basically living on listing fees, and later on, over last 20 years, transaction charges have become very important. Data dissemination fees has become important recently in international markets, mainly because of the fact that the data is generally sold to third parties there, whereas in India, most of our data is given free on the websites of exchanges. That's why Indian exchanges also have a very large number of hits compared to international exchanges. But effectively, there has been sort of a little increase on the data dissemination fees. If the volumes on other business increase, probably there might be some increase on the data dissemination fees. But overall, we think the listing fees have increased very nicely. The transaction charges have increased very nicely. Even depository services charges have also increased nicely because of the markets which have been bullish over last few years. So effectively, if India grows at the pace at which it is growing, then BSE will also basically have similar framework, in my opinion.
Now, your revenue growth has been not impressive. 3.5% CAGR in last 5 years. Margins have declined in this period. How would you like to defend that?
See, basically, if you look back, BSE's traditional largest amount of income used to come from treasury. That is, the money it has in its balance sheet used to get you a lot of income. It still does, but what happened is over last 5 years, we have restructured our organization. We have set up clearing corporation where we had to put in large amount of funds. We also had to give back almost 300 crores to our members because of the reduction in the deposit charges from 1 crore to 10 lakhs. So we ended up giving away almost 300 crores, which has also brought down the treasury income. And of course, the Indian interest rates have gone down substantially over the last few years, and because of that also the treasury income has gone down. On the other side, the listing fees, the transaction charges, depository services, data dissemination fees, all of them have gone up reasonably well. So overall, you may not see the increase in terms of the overall top line, but beneath that there has been a lot of changes, and what we call a good income, sort of operating income, has started becoming larger compared to the treasury income. And that's what, if you again see in terms of the profits, we were running a LEAP scheme, a liquidity enhancement scheme for the equity derivatives, and it was taking large amount of resources, almost last 4 or 5 years, which has now been made to zero. So effectively it will have an impact. There was SEBI regulations about giving away or depositing 25% of the BSE's profits or exchange profits. It is applicable to all exchanges, to the settlement guarantee fund of clearing.
Okay, Ashish, now let me come in for my next question, and that is the divide. You are the oldest exchange, yes, but NSE is a clear market leader across asset classes: cash, equity derivatives, interest rate derivatives, currency derivatives. What's the strategy that you now have to pull turnover and market share in whichever way you can from NSE?
See, traditionally many people think that basically trading is a mainstay of exchanges, but exchanges purpose is basically to raise funds for the country's corporates and also provide good returns to the investors. And BSE has been traditionally very good at investment framework. So if you look at the IPOs, BSE has the largest number of companies listed, but even today when IPOs happen, BSE ends up getting very large market share. Similarly, if you look at the corporate bonds, in last 7 months, BSE has raised almost 1,35,000 crore rupees, which is unbelievably high compared to anyone else. Similarly, in mutual fund distribution through exchanges, BSE has a very large market share. SMEs, BSE has a very large market share. So traditionally, BSE has been very strong in basically doing investment related activities. It had not participated in the speculative activities, which seem to be very exciting for most people. But effectively, recently in 2013, BSE started participating in currency derivatives, and there BSE ended up taking very large market share. There are very few examples in the world that in such a short time of 3 years, a new entrant, although we are very old in that business, we were new, and very few new entrants have been able to take very large market share. Similarly, for interest rates and equity and equity derivatives, we have not been able to take market share, for which we are working pretty hard, and we have recently set up a new exchange which was inaugurated by Honorable Prime Minister of India, Shri Narendra Modi, on January 9th. It is called India International Exchange in Gandhinagar Gift City. Gandhinagar Gift City is going to basically act like a Hong Kong for China. Over last 30-40 years, Hong Kong has helped China raise trillions of dollars of investments, and if Gift City becomes like what Hong Kong is to China, Gift City becomes that to India, then a market infrastructure institution like India International Exchange will play also its own role. So overall, we are quite comfortable in what we have done and how the revenue mix, how the...
Okay, wish you all the best. So that's good to know. Ashish, let me now come in. We have limited time. If I glance at the list of the top exchanges globally, BSE is ranked 11 in terms of cash trades, 13 in terms of derivative contracts traded. Any milestones that you are aiming to achieve, say on metrics like daily turnover or otherwise?
See, basically exchange business is a business of compliance, and we want to be the best in compliance. We want to be the most compliant exchange, and all this sort of frameworks of going into numbers and getting market share is basically more about the outcome of the compliance activities. And so we have over last 5-6 years focused largely on compliance, and it will continue because our business is of compliance, and that's what we will continue to do.
Also tell us about the initiatives to drive growth, you know, like new and upcoming products, entry perhaps in new categories or platforms. What is it that you're looking at?
See, we basically take ourselves as people who are experts in transaction processing. Earlier we used to do very simple transaction processing of matching the trades, and that's what most exchanges in the world do. But we have recently started over last 5-6 years even mutual fund transactions, which are little more complex. They require to be settled differently and so on and so forth, and we are becoming very large in that, and we are trying to get into other adjacent areas which are similar, little more complex, but effectively sort of giving us an idea that we are into little more complex transaction processing. We have a very large distribution network through our members across the country and across the world, and we try to basically leverage our distribution, but primary focus will continue to be on compliance. We also have, of course, a plan for commodities trading as and when it is allowed. And in India, anything which we do is basically very highly regulated, and it should be. And so whatever our plans are, they are subject to regulatory regulatory approvals and so on and so forth. So that's where basically we work on. Whatever that has been allowed over last 5-6 years, we have taken very large market share, and we'll continue to work hard going forward.
All right, Ashish, good luck with the IPO. Thank you for joining us.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.